Hello, everyone. Thanks for joining us on this Saturday, and welcome to the Specialist Trading Educational Presentation, where today I want to talk to you about everything you need to know about entries, part 2. This is the second in our series of educational presentations, where I really want to ramp it up a level about entries, because oftentimes, as we said, it's really not so much that you have a faulty strategy or a faulty idea about what you want to buy or sell. It's just that your entry is actually faulty. So that's what we're going to focus on today. And you're also going to see how many of these things that I've taught you last week, as well as I'm going to be teaching you this week, are easily accessible on our platform, the PTS Primo charting platform that teaches you everything you need to know about entries. So once again, thanks for joining us. My name is Steven Primo, president and founder of Specialist Trading. If you're new to my webinars, we're all about educating you. We are first and foremost an educational company. We don't proclaim to know what we think the market's going to be doing, or what the perfect stock is to buy, or the perfect future to sell, or what's going to happen with Bitcoin. And we don't even announce those things. We're not a signal service. We are just solely educators. And so that what we want to do is put the education in your hands so that ultimately you can make your own trading decisions. I've been trading now for 44 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. So during my 16 years on the floor, I saw and traded just about everything you can imagine. Any system or brand new trading methodology that is out today, it's most likely been around. It's just been rebranded and renamed. So in my 44 years, I know what works in terms of consistency, and I know what doesn't. So that's what we do at Specialist Trading. That is the service we provide. We simply teach you all of these things that hopefully will elevate your trading, and so that ultimately you can make your own trading decisions. In my 44 years of trading, the only traders that are still around, the only ones that are still trading, are the ones that make their own trading decisions. None of these traders watch the news. None of them go and read the blogs or find out what someone likes or doesn't like in certain stuff. They have a simple plan that they implement and they trust, and they make their own trading decisions. That's what has sustained them. And that's what I want to do with all of you, all of my students around the world in over 115 countries and in every state in the United States. Hopefully instill that same educational basis in you so that you can make your own trading decisions. Now, before we begin today, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of examples today. We're going to review what we talked about last week and then go over some new different techniques for entries. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are an educational company, all examples and everything you're going to be seeing today is strictly for educational purposes only. Now, if you haven't done so already, I invite each and every one of you to follow us on Twitter. We're getting a big following now. A lot of people are following us, close to 5,000 followers, and mainly because we really try to educate you on a daily basis. There's our handle right there, abbreviation for Specialist Trading. Every day I post different information, anywhere from signals our strategies have generated, and I go into a little bit of explanation as to why they were generated, and also little bits of financial wisdom to help you trade along the way. So lots of great free education on a daily basis. Haven't done so already? Follow us on Twitter. Lots of good stuff there. Now remember, if you've come here today thinking I'm going to tell you what to buy or sell, you've come to the wrong place. That's not what a good educator does. You see, a good mentor does not trade for his student. He teaches you how to trade. And that's our concept. That's our philosophy behind Specialist Trading. So my goal is not to force feed you signals, not to trade for you, but to teach you how to trade with the specialist edge. When I was struggling some 44 years ago, my mentors taught me the same way I teach my students. And it's basically trying to educate you so that you can ultimately make your own trading decisions. That's the specialist edge. And hopefully you'll see that attention to detail in today's class. Now, before we begin, I just want to make sure we remember, once again, we are new to this platform. This is Zoom now. We switched over. And I just want to make sure that you can see and hear me clearly. So if you're having difficulty, or if everything is fine, please respond. Go to your chat box. Just type in a yes or a no. That way I know that everything is coming through loud and clear. While you're doing that, I will make the announcement that we will record this presentation. So if for some reason you can't see or hear me clearly, everyone will get a link to this recording. But if you could just go to your chat box and just type in yes or no, that will let me know that you're seeing and hearing everything clearly. Okay, I see some people already coming in now saying yes. Believe it or not, I've said this before, but I gave an entire presentation one time without the microphone on. So that's why I just want to make sure that you're seeing and hearing everything clearly, okay? Okay, looks like we should be good to go then. With that stated, let's begin today's educational presentation. And I want to start off by reviewing what we went over last week, okay? Because this is extremely important. This is not just something that, we just simply want to talk about and, say, well, okay, let's move on to the next thing. I want to make sure that you fully understand this process. So let's just go over very lightly what we covered last week, especially for those people who weren't here last week. Remember, the theme of last week's presentation, including this week as well, is that individual price bars are always telling you what they want to do next. You see, we've always been trained that some guy in a chat room or some guy on TV or some convoluted indicator that we have no idea what it's based off of, how it works, is supposed to tell us what the market's going to do next or whatever we're trading. But if we really notice, if we really learn the correct way, it's the price bars that are right in front of us. That's what's telling us what the market wants to do next. After all, that's the source of what we're trading, right? Why wouldn't we focus on that? Well, it's because we're never taught to focus on that. We're always taught to focus on what some guy in a trading room is saying or what some guy on TV is saying. But the individual price bars of whatever market you're trading, whatever time frame, are always telling you what they want to do next. So therefore, this really makes our job simple, because our only job as a trader is to identify these price bars, see what the market wants to do, and then apply our strategy to that direction. That's it. All right. We don't have to figure out what the earnings are. We don't have to figure out if the new CEO is taking the company in a different direction. We don't have to figure out support and resistance. We don't have to figure out candlestick patterns. We don't have to figure out, volume. There's so many things that we're taught that really are nonsense. There's no consistency in them. And they really, all they do is overcomplicate our trading. So if we can leave things as simple as possible, if we can leave things really just by following what the chart is saying, well, then we've really, eliminated half the battle right there, because we're right in sync with what the market wants to do. Okay, so what did we talk about in the first section? We talked about the top bottom 25% bar. So what exactly was that? Okay, well, these are bars that close either in the top or bottom quarter of their range. So as we look at this generic bar right here, remember, it makes no difference what bar this is, what time frame. It makes no difference what market. This can be applied to all markets, all time frames. But what you want to do is divide a bar by 4 separate but equal parts. And if you close in the top quarter, the top 25%, what is the market telling you? Not some guy in a chat room, not some guy on TV. What is the market telling you? It's telling you that on the short term, it's saying it wants to go higher. What a great edge to have, right? Coming exactly from the source of what you're trading. Now, conversely, what if you see a bar like this? Well, you do the same process. You divide it by 4 separate but equal parts. And if you found that you closed in the bottom quarter, the bottom 25%, what is the market telling you? What is the source telling you? It's telling you that on the short term, it wants to go lower. What a great edge to have coming from the very thing you're trading. It's actually translating what it wants to do for you. Now, the top bottom 25% bars should be applied to the setup bar for whatever strategy you're trading. So in other words, we're not going to be talking about strategies today or techniques in terms of, rule-based systems that, come together and form a signal. That's not what we're talking about. For all intents and purposes, you could be trading any strategy you want, okay? Really makes no preference at all. All you have to do is just basically, apply this simple tool. That's all you have to do. See, someone is using something here. I'm not really sure, but let's just control everything. Okay. For example, let's look at this chart in Apple. All right. We looked at this last week. Now, as we look at this, let me just delete this. We see that we think that Apple has broken a downtrend. And right at this point, we think it's going higher. Okay. So at this point, maybe some guy in a chat room, maybe some guy that you, is your brother-in-law, maybe some guy that you trust, that you think he knows all about the markets. He's telling you that you should buy this right now because look at, we broke the downtrend. We're going to go straight up. We're probably going to make new highs. So you do a little research and say, you know what? I think he's right. So you step in and buy. And then would we be buying here? Absolutely not. Because where did the bar close? Did it close in the top 25%? No, it closed right in the middle, roughly. So what does this mean? Basically means that the market isn't giving us a clue. And look what happened, right? Now, was it wrong to buy Apple? Not necessarily. It's mainly we're focusing on entering at the wrong place. So example, once we look for a first bar that closes in the top 25%, which is this bar right here. You see how we closed right there in the top quarter? That's the market now giving us a signal, okay, it's okay to buy now. Most likely, I'm going to keep going higher. Now, is this guaranteed 100%? Absolutely not. Nothing is guaranteed 100% in the market these days, and it never has been. So if anyone tells you that, you should run because there's nothing that's 100%. All we're trying to do with these techniques that we share and teach our students is to increase your odds for consistency. We're trying to put the odds in your favor. So if you had waited, instead of trusting your brother-in-law to buy it right here and waited for the market to tell you when to buy, well, that would have been your buy setup. And look what happened. So once again, it wasn't necessarily wrong that the idea was out of step. It wasn't wrong to want to buy Apple. It was just that your entry was faulty. Now, same thing can happen here. Let's say you don't like this stock. This is Tiffany, okay, an older chart, and it's been heading lower, and all of a sudden we have a nice bounce, but you don't believe in it, right? You think it's just a pullback. You think it's just an arbitrary bounce. It's getting ready to go lower. You've done the research according to your strategy. This should not be this high. You want to sell it. So you jump in and sell right here, right? But is this the right thing to do according to this technique I'm sharing with you? Remember, we want to base our decisions off what the market is telling us. Is the market saying it wants to go lower? No, because these bars here are not closing in the bottom 25%. So we shouldn't take that sell signal. Now, is it wrong to want to short this stock? Well, maybe not. Maybe it is a good idea, but this is not the right place to sell. And look what happened. You see, this is how most traders lose money. They'll come in at the wrong place. They'll say, oh, this system doesn't work. This strategy doesn't work. I want my money back. Or, oh, God, this guy's a terrible teacher. Or I'm never going back to his website again. And it's not that the idea is wrong. It's just that your entry is faulty. So in order to go short, if we want to increase our odds for consistency, what we want to do is wait for a bar that closes in the bottom quarter of its range. And what do we have here? The very next bar closed in the bottom quarter. That's the bottom 25%. So even though this isn't guaranteed, we could continue going higher. This is the highest odds that you should be selling at this point, because if we're going to go lower, this is the market telling you I want to go lower. And ultimately, you would have sold right here and you would have had a nice profit. You see, now all of this was not based on what some guy says in a chat room. None of this was based on support and resistance. None of this was based on volume. None of this was based on earnings. None of this was based on the jobless claims. There's no reason to follow those things. There really isn't if you're trading. If you are an investor, sure, you need to know those things for the long term. But if you're investing in trading, please, it's just overcomplicating your trading. My mentors called that useless noise. And both of these traders have been trading roughly for 40, 45 years each when they shared this with me some 4 decades ago. And it was a hard concept for me to grasp because I had been taught you're always supposed to listen to those things. Those are the things that run the market. When I finally had the courage to let go of those things, that's when my trading started to become consistent. So I'm giving you the opportunity to let go of those things. You know, trading is not about adding more things to your trading plan. It's more about releasing things from your trading plan and keeping it as simple as possible. Okay, let's review section number B, or section B, I should say. This is what we went over last week, and this was the confirmation method, okay? Notice we say method. This is not a strategy. That most beginning students have trouble with this because they think this is a trading strategy. They think this is how you should base your signals and buy and sell signals off of. No, it's just a method to add on already to your strategy. So here's the standard definition. The confirmation method is the verification that the trend has resumed in the desired direction by either trading above or below the previous bar's range. This is your signal to enter the trade. A specialist always waits for his trade to be confirmed before entry. So what exactly does this mean? Well, let's just say you have a signal, okay, on a certain bar. Rather than just buying or selling, regardless of what the signal is, you wait for it to trade above that bar if you're going long, or if it's a sell signal, you wait for it to trade below it. And you notice I didn't say it has to close above or has to close below. It just has to trade there. That's your confirmation that it's going to continue in the same direction. Now, I always like to use this metaphor of a train leaving a station. Let's say you want to get from point A to point B, and those students have heard me say this a million times, just bear with me. But for the new students, it makes a lot of sense. It's a lot easier to understand. So you're waiting at the train station, and you want to go from point A to point B, and you're waiting there, and you see a train coming down the tracks, but it's going in the opposite direction of where you want to go. You wouldn't jump on that train, right? Because you're saying it's going the wrong direction. But this is the way most traders trade. Why would you trade this way? If you want to buy, why would you buy if the market's going down? Or if you want to sell, why would you sell if the market's going up? Why would you get on board that train that's going the opposite direction of where you want to go? You want to get on board the train that's going in your direction. That's the one you jump on. It's the same way with trading. You want that confirmation that we're going in the standard direction. And the way we do this is by trading above the previous bar's high. So let's look at this example here in letter M. All right, we have a buy signal right here. Once again, if we had simply bought, look what would have happened. Most likely we would have gotten ourselves stopped out, okay? But what we want to do is say, okay, listen, even though I know we're not closing the top 25%, sometimes it will work. So I want to verify that it's going to trade here. So look what happened on the next bar. Did it ever trade above this bar? No, it didn't. Now you have the option. Remember, this is a method. It's not a system. You have the option to say, well, since it didn't trade there on the next bar, I'm out of this. Most likely it's not going to happen. Or you can do what's called tracking. You can continue to track it all the way down until ultimately it does trade there. And then that's your signal to enter. And then if it's the right thing to be buying this, you would have had a nice profitable trade, see? Let's use this to the downside. Now here's our sell signal. Now what happens most likely is traders say, okay, it's a sell signal, I'm going to sell at the market on the opening or the close of that day. But if you're using the confirmation method, you want to jump on the train that's going in that direction. And the only way to know if it's going in that direction, if it trades below the low. So let's see what happened. It did. So it's going in your direction. It's been confirmed. So you can enter right here and watch the trade unfold. Now, many times there are different advantages to having this technique, because many times it may keep you out of some entries because you'll sit there and it'll never get confirmed. So that's why we say it's a method. That's why we say it's up to you as to how you want to apply it. You can actually apply it and say, well, I'll use it for one bar only. If it doesn't happen on the next bar, then I'm out. Or we have some certain strategies that continue to apply it all the way until you get filled or until the strategy is no longer valid. It's up to you. Experiment with it. See how it would have helped. Now, can you combine the top bottom 25% with the confirmation? Sure. That will increase your odds for consistency even more. So you can use these separately, or you can use them in combination with each other. It's up to you. These are all just ways to increase your odds for consistency in entries. We're just trying to give you education so that you can decide how you want to apply it. Now let's go to the next phase here. We're going to be into part 2 now in our series, and we're going to take it even up a notch even more. We're going to be talking about more advanced entries. And this is just one more technique. I actually like to use this technique a lot, especially in different market environments. This is called, for this section, the 25, 50, and 75% entry rule. All right. I know some of you may have heard of this before, but let me go over exactly what it is. Who exactly is this entry technique for? Well, it's for traders who want to enter with lower or higher fixed limit orders, okay? And they want the order to be either lower or higher than where it actually is. So the advantage of using this particular technique is that obviously you'll get a better price if you're entering at lower or higher price, depending on if you're going long or short. But you'll also get better risk reward ratios. Now, a lot of traders focus a lot on risk reward. If you're not familiar with what that means, it means that if you're risking, let's say 1 point, you want to at least make twice what you're risking. So you want your risk reward to be 1 to 2. In other words, you'll risk 1 to make 2. You can risk 1 to make 3, risk 1 to make 4. This way, a lot of traders feel more comfortable and they'll be in the game a lot better. Now, another advantage of this is if you have our PTS Primo charting platform, it's partially available on the PTS Primo charting platform. In other words, I'll show you exactly what I mean in just a few minutes, but the top bottom 25% is available on our platform. So is the confirmation method. So you will know exactly where those levels are. With one-click access, you can see them. And this new technique is partially available as well. Now, the disadvantages of using this advanced technique is that you may, at times, miss a successful trade. So that's the only thing. So at times, if you're using the confirmation method, many times you'll miss a trade, but that's okay because the trade is faulty and it's going the wrong direction. Because you're using the confirmation method, you didn't get into an unsuccessful trade. But with this particular technique, you may actually miss a successful trade. So it's a little bit different. Okay, so let's look at this example here. Once again, these are generic charts. It absolutely makes no difference if this was Bitcoin, if this was a monthly chart of Apple, or if this was a 5-minute chart of the E-mini futures. You can apply it to any market, any time frame. All right, so obviously, this generic market has been going down, right? But let's say your strategy, remember, we're not talking about strategies today, but let's say your strategy generated a buy signal right there at the very low so far. And you're thinking to yourself, you know what? I think this is a good buy, but I went to that webinar that Steve Primo gave, and so I want to apply some of his techniques. I don't just want to jump in because let's say I had bought right here off this bar. Well, look what happened the next day. So I want to be careful with this. This may be headed straight down, or it may be ready for a bounce. So normally you would apply the confirmation method right here, right? That's where you would wait for it to be confirmed. But where would you place your stop? Well, first thing you want to do is measure the range from top to bottom, okay? That's the setup bar. The setup bar is always the bar that is above the arrow. Now, on all of our strategies, we have either a green arrow or a red arrow that represents where a buy or sell signal is. But let's say you don't have, one of our strategies and you just trade something that you devise. Well, when all the rules and all the requirements come into play, that's called the setup bar. The bar where all the requirements have come into play, where all the rules have been met, that's your setup bar. That means you're ready to enter. So you want to, whatever that setup bar is, you want to measure from top to bottom, from the very top of the wick to the bottom, the complete range, okay? And now, if you go down 25% from the top, that's one entry level. And as you can see, you traded right there and you could have entered. If you want to enter at a lower level, well, you would have entered right there at half the level of your setup bar. And even more, if you wanted to enter at the 75% level, you could have entered right there at the very bottom before it went up. So you see, what you're doing is you're giving yourself better risk reward ratio because now you've just decreased the distance from your entry to your stop placement. Your stop is the exact same place, but you're entered at different spots. You can enter once, you can enter more than once, twice, 3 times, it's up to you, or you can decide which is best for you. Now, let me give you a little advice about some of these. If you are using the 25% entry level, you will get filled more than the other two, because oftentimes it comes down to that level. If you are using the 75%, you will oftentimes not enter the trade. You will miss the trade. This is what we mean by missing the trade. So oftentimes the trade will work out. It'll only come down a certain point and then go right up. And you'll say, oh gosh, why did I enter right here? Why didn't I just enter it here? So the moderate place to enter is where, and plus they don't usually say this, but where I usually like to enter is at the 50%. You're giving yourself pretty much 50-50 chances of entry, and you're decreasing your risk. Now, I like to do this if it is a whipsaw market. If the market's kind of choppy, if the market, the way it is in the summer, the way it's been lately, and you don't want to get into this whipsaw mode, and you realize markets don't just take off the way they were months ago, where they go straight up or straight down. It's kind of just going backing and filling. Well, this really helps a lot because first of all, if you do get stopped out, you have less risk. Instead of losing maybe 10 points, maybe you'll lose 5. Instead of losing maybe 3 points, you lose 1.5. Okay. And your stop stays at the same. Wherever you wanted your stop placement to be, it's going to stay the exact same place. Now, one thing I do advise is that you don't just simply enter an order down at the 25, 50, or 75%. What you want to do first is see that the order is initiated. In other words, it trades above the confirmed level. As you can see, we traded above first. So it was confirmed and then it went lower. You want to see that your trade is confirmed before placing an order, because many times, as you can see here, let's say your buy signal was on this setup bar. This was your setup bar. And so you place a 25, a 50, and a 75. Well, you would have gotten filled on all of them and you would have had a major loss. Well, if you had waited for it to be confirmed first, you would have never been into those trades, because you see it never went above. Remember, we're still using the confirmation method. So what we would have wanted to see was that we traded above and then we went down to these levels. Now, does this guarantee, once again, a successful trade? No, but once again, we're trying to put the odds in your favor. So experiment with this, see what works better for you. It's been my experience that you want to see it confirmed. You want to see it trade above here, just the way you were entering on confirmation method, and then you enter your orders lower. You see, the reason why this technique is so good is because most students, have this concept already in mind. They say, well, I'm going to place my order a little bit lower, but there's no structure to that. It's just based off a whim, like, well, I'll put it down a half point, or I'll put it down 2 points. Seems like that's a good place. You see, it's just guessing. There's no structure. There's no type of, rule-based methodology. It's just all based off where it feels good to you. With this, you actually have structure, 25%, 50%, and 75%. You can enter, you say you wanted to buy 300 shares, you can buy 100 at 25%, 100 at 50, and 100 at 75. Or say you want the most bang for your buck, you can say, I'm going to buy all 300 at 75. It's up to you. But experiment. Remember, as I said in the opening statements, my job is to provide you, as an educator, provide you with this information. Your job as a trader is to experiment with it, research, and see if it works for you, and then apply it. It's your choice. We're never going to make choices for you at Specialist Trading. Now, let's say you had bought at the 75% level. Well, that would have been the best place, and you would have been filled. And look at the trade that happened after that. So either of these entries would have been better. But remember, had you used the confirmation method, you would have paid the highest. So this is a way to decrease your risk and to get a better price. Now, let's look at this sell setup. All right, we close in the bottom 25%, good sign. Your strategy generated a sell signal. So this is the setup bar. All of the rules have come into play. This is the bar that you want to be selling. A standard entry would use the confirmation method. This is where we want to go short if we trade below there. But you're saying, well, I might put my stop somewhere up here, maybe high. That's a lot of risk. So maybe I'll, measure this. Here's our setup bar. Remember, the setup bar, we do not measure any other bars other than the bar that you have all the rules and requirements met. And then you divide that 25%. Here's halfway up, and then here's 3/4 of the way up. And you decide, where do you want to place your order? Okay. Let's say you place your order. You feel like we're going to bounce up a little bit. Maybe we're going to fill this gap. So you say, I'm going to use the 75%, or still someone may say, no, I'll use the 25. I'll enter my full position to go short at 25. Someone may use 50. You can stagger it, 25, 50, and 75. It's up to you. But look what happened here on the trade. You missed it. So this is the disadvantage of using this particular technique. I'm not going to just show you this and show you the best setups and cherry pick them and say, this works fantastically, because sometimes you may miss a setup. Had you used the confirmation method and just sold when it traded below right here, well, you would have been in this and you could have had a nice trade. But because you placed your limit order above, you missed everything entirely because it never bounced back up. So this is something you have to take into consequence. All right, so let's look at some more examples. Remember, the confirmation method, the top bottom 25% rule, and partially we display the 50% level on our platform. These are all one-click access. You have these on our platform. So let me show you some examples of what we had here in different markets, different timeframes. Here's a weekly chart of Facebook going all the way back to the beginning of the year. All right, here was a strategy, a buy signal generated by one of our strategies. So how would we have traded this? Remember, these are all weekly bars. Okay, so we say, well, all right, well, first thing we want to know is where are we going to protect ourselves? What if we're wrong? So let's say this is where we'll place our stop, just below the lows, okay? Looks like a good idea. So we'll place our stops just below that. All right, now, where is our confirmation? Well, it's right here. So where would we roughly be entering? We'd be roughly entering about 282, right? Okay, so we're entering around 282, and our stop here is roughly about, let's say 242 to make things simple. That's a 40-point swing. So if we're wrong, and if we enter and it goes straight down, we're going to lose 40 points. Now, even if we buy the options, that's how much we're going to be losing in terms of distance. Is that too much for you? Let's say it's too much for you. Well, then you want to apply the 25, 50, 75% technique. So what you do is you divide this setup bar. Here's our setup bar once again. Measure the range from top to bottom. And once you see how many points it is, go down 25% from the top. That's 1 point of entry. And here's the chances are you're most likely to enter. Or 50%, kind of medium chances, 50-50%. Or the least odds for entering, but the greatest reward if you get to buy down here is at 75%. Now, on top of this, the other advantage is if your stop stays the same, which it should, you're lessening the risk. You've just decreased your risk. You decreased it here, you decreased it here, and even more here. So if you get filled at the 75%, look what your risk is. It's not even that much. So this is a great risk reward plan. Either way, you've increased your risk reward ratio. So let's see what happened. Well, we had confirmation. We traded above. You see how we traded above? So the confirmation was filled, and you could have entered at any of these three places. Now our stop is still in play. Look what happened. It's a nice little trade there, right? These are weekly bars coming into July, last month. So we have a nice little trade, okay? Let's look at another example. This is an eBay. This is coming into June. This is a sell example, okay? We're closing in the bottom 25%. If we are going to go short, we want to risk right here. This is where we're going to get out if we're wrong, okay? Roughly about, let's just say 62, or let's say 63, just a little better. And now we're going to use a confirmation method, which would be down here. So let's measure from top to bottom, okay? Top to bottom, 100%. Now let's say it's a little bit too much. We think that, we want to cut down, we want to have a better risk reward ratio. So we measure the range, we go back 25%, we go back 50%. Now we're going backwards the other way now because we are going short and now 75. So if we go short here, we'll decrease our risk. If we go short here, we'll decrease our risk, and we'll really decrease our risk here. So let's see what happened. Well, look at, we got filled at the 25%, we got filled at the 50%. But nothing yet at 75. So we may miss this trade. Let's see what happened on the next bar. The next bar, we went up to the 75%. So we got filled at every level. So whatever level you were thinking of, you would have ultimately been filled. And look what happened. Well, you got stopped out. All right. It's a loss. Okay. It happens all the time. But could we have prevented that loss? Yes, by applying the confirmation method. Remember, even though this is a valid signal, we wanted to still trade below, and then we place our limit orders to sell at a higher price. And it never traded below. There was never confirmation. Remember, confirmation is the tool that helps us know that we're going in the desired direction. And we never had confirmation that we were going lower because the next bar went right back up, the next bar went higher, and we continue to go up higher and higher. So this is why I really stress that in the beginning, while you're studying and researching this, you want to apply the confirmation method before you enter an order, a limit order at 25, 50, or 75% level. Okay, one more example here. Let's look at, this is Novex, I believe. All right, market's been coming down. This is a pullback trade. Okay, I believe this is a strategy number 4, buy signal. All right, so this is a buy signal. We like this. Looks like it's a good one coming into August here. This was just a couple of weeks ago. Where are we going to place our stop? Right here. This is where we'll get out. If we're wrong, we're going to get out right here, okay? Here's our entry if we're going to be using the confirmation method. So we roughly be entering at 192, and our stop would be at 172. That's 20 points we're going to be risking. That's a little bit too rich for our blood, right? 20 points of a $200 stock. So we're thinking, all right, maybe I'm going to apply this 25, 50, 75% technique. So remember, it's not based on the top to the risk. That's not what it's based off. It's based off of the setup bar, this being the setup bar. So you measure that once again, from top to bottom, that's 100%. Here's 25%, 50%, and 75%. All right, so decide which level you want to be entering at, but we have to first wait for it to be confirmed. All right, look what happened. The very next day, it opened higher, so it was confirmed and then went straight down. You could have bought at 25, you could have bought at 50, but 75 is still left out, so we can still wait. There we are. The third day, we were able to buy at 75%. So we've just decreased our risk. We're in the trade at either of these levels, all three or just one of them. And look what happened. See how simple this is. There's no reason to say, well, I have to wait for the earnings to come out, or, well, let me wait for that news, or let me see what that announcement is on the economic numbers, on the jobless claims. It's silly. That's why overcomplicate things. Remember, I'm living proof that you don't need that. I'm still here 44 years. I'm still trading. If I can, still be here trading without ever looking at news in the last 4 decades, why would you feel you have to? It's too subjective. The market tells you just about everything you need to know. Now, remember, nothing is 100% guaranteed. We're teaching you these techniques to put the odds in your favor. But by applying the 25, 50, and 75% technique, you can decrease your risk by entering lower, or if you're selling, entering higher. And you can also have a better risk-reward ratio. So it's a really good technique, works much better, in my opinion, in these choppy sideways markets. Okay, let's recap. We went over the top bottom 25%, which once again is available on our platform. All you have to do is click one button and you'll see all the bars that either close in the top or bottom 25%. What a great edge. Also, confirmation method. If you get a buy signal, you want to buy if it trades above that signal bar. If you get a sell signal, you want to only sell if it trades below that signal bar. Happy to say that once again, with one-click access on our platform, you can see where the confirmation automatically is with our strategy signal. And then lastly, the 25, 50, 75% entry techniques. Okay, this is just simply taking the setup bar and dividing it and entering it at these different levels. Now, on our platform, we have the 50% entry. So it's easy to figure out where 25 or 75% would be. The only main reason is we didn't want to overcomplicate things. Once again, that's our philosophy. Keep things as simple as possible. And if we showed you all these 3 different levels, the screen would really be cluttered. And you look at that and you see confirmation, you'd see your stops, you'd see your up or down arrow, and you say, what is this? So we just wanted to apply one of those. So we put the 50% level in there. And that actually is the most popular entry level amongst our students, 50%. So ask yourself, can these entry techniques, which I've covered in the last 2 weeks, do you think they can improve your trading? Could they help you? Remember, oftentimes it's not that you have the bad idea. It's not that you bought the wrong stock or you sold the wrong stock or you got into the wrong market. It's just that your entry technique was faulty. So maybe these could really help you going forward. What about if I could give you tons more techniques, not just entry techniques, but for stop placement techniques, or about different exit techniques, or how about trading with the trend? Well, we have a great offer for you today for taking time out of your Saturday to come attend this educational presentation. We're going to offer you our boot camp course. This is all about trend trading. It really focuses and zeroes in on what it means to trade with the trend. You'll get instant course access. You'll learn about entries as well as exits and stops. You'll learn how to trade aggressively in the trend as well as conservatively. You get the complete course rules, add-ons available, and educational correspondence. But the best thing about becoming a student of mine is the availability of our platform. On our platform, we have one-click access to a great strategy. This is strategy number 1. Now, up until now, we've just talked about different techniques and methods in which to apply to your current trading strategy. But here is a full-fledged strategy, all right? This is a pullback method, meaning that it looks for the trend and then it looks for a sell-off in that trend to buy at lower levels. or it looks for a downward trend, and then it looks for a bounce to sell at higher levels. But remember, we're still keeping the rules, looking for the top bottom 25%. We're still staying in sync with the trend. We're just kicking it up a notch and showing you more advanced ways. This is one of our most popular pullback strategy courses. You're going to get the complete rules, know how to trade it aggressively and conservatively, any market, any time frame. This is also included. Now, pay no attention. It says stock strategy there because when I first started teaching this strategy, most of our students were just stock traders, but you can apply it to anything. I use it with my e-mini trading, intraday e-mini trading. We have futures traders as well as forex traders, even Bitcoin traders that use this, okay? So it can be applied to any market, any time frame. For example, here's an older chart of spiders I always like to share. It looked like the spiders were in a downtrend, right? But what strategy number one did is that it discerned that the overall trend was up and that this was actually a buying opportunity. So it generated a buy signal right here at the bottom. And look what happened. Now the spiders went up 8 points, which doesn't seem like a lot, but that was comparable to nearly 700 points in the Dow because the spiders represent it's the ETF that represents the S&P 500. So you can use this as a directional tool as well. Apply it to different indices to tell you what you think the market's going to do. It's a great, great strategy. I personally use it, and I've been using it for decades now. But we're not going to stop there. We're also going to throw in some extra bonuses for taking time out of your Saturday to join us today. A total of 12 trend trading bonuses, okay? I'll go through these really quickly. Bonus number one, obviously the boot camp. Number two, you're going to get my strategy number one trend trading course. Also, you're going to get the entries course, the exits course, the stop placement course, the buy sell line scanner. The buy sell line is a great tool for telling the overall trend. You're going to be able to scan for stocks or any market that is in either overall uptrend or downtrend. Remember, we talked about the top bottom 25%. You can scan for stocks that are in the top bottom 25%. Bonus number 8, you get the scanner to look for strategy signals. Bonus number 9, you can chart multi-scan, or you can multi-scan different charts for multiple strategy signals. You can scan for more than one thing at a time, all right? Bonus number 10, that's our auto-click chart entries exit tools. There's one click on the chart, and you can see where the high probability entries are as well as the high probability exits, all right? Now, bonus 11 and 12 are similar. You can have the add-on for TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader. The add-on simply means the up and down arrows of the strategies that we're going to be sharing with you, and mainly knowing where these buy and sell signals are. But what's even better than that is the final bonus, bonus number 12. You're going to get 6 months of our PTS Primo charting trading analysis platform, okay? This is where everything is included. It's just one click away. Now look at on the far right-hand corner, you see the price levels, what this is all worth. We're going to discount this tremendously. On top of that, we just said we're going to share with you 6 months of the platform. That would normally run about $900. Absolutely free. So this is a great, great offer, a chance to learn all these things that have taken me over 40 years to accumulate. You're going to have in an instant, and you can be studying and researching them as early as today if you like. All right, so let's see what else is on the PTS Primo charting platform. Obviously, you're going to get strategy number one click away where you see where the buy and sell signals are. You're going to get 4 buy-sell line features. These are 4 different features to tell you the overall trend. Our proprietary exit levels, our auto-generated stop placement levels, signal scanners, strength of trend tool to find out the strength of the trend, if it's running out of steam or still going. And finally, you're going to get personalized tech support. Okay, so let's break it down. All these things, the boot camp course, the strategy, the full strategy, all the 12 bonuses, as well as 6 months of the platform. Now, normally, if you purchased all of these separately, we're going to charge you over $8,400. That's far too much just for taking time out of your Saturday. So we're going to discount that down for a limited time only to $297, okay? Less than $300, you're going to save over $8,100. This is a great, great offer to get acquainted with us. We don't want to charge you the moon the way so many other websites do. They string you along and get you excited, and then you see that it's $5,000 or $10,000 to learn all the things. We want to share with you our knowledge, things that have accumulated for over the 4 decades I've been trading for less than $300, okay? I can almost guarantee that most of you lost over $300 this past month trading, right? Well, for $300, you're going to get what's taken me years to accumulate, and I'll be there with you every step of the way, okay? All right, here's how to take advantage of this. Contact Pro Trader Strategies. Remember, I developed the platform with them. I also, I should say, they also are in charge of all the discounts, all the pricing. If you'd like to sign up over the phone and get this great offer for a limited time only, it's the phone number is right there, 310-598-6677. If you'd like to do it online, that link you see at the very bottom is the info page. It will take you to the sign up page, and there's more information on that sign up page, but that's not a live link, but we've just posted a live link on the chat box. If you go to your chat box there, just simply click open that box and you'll see a live link there. You can click that on and we'll take you to the sign up page. Now, even if you have a question about tech support, a question about pricing, a question about how long this deal lasts, contact Pro Trader Strategies. They have trading consultants manning the phones right now. They would be more than happy to answer any question about pricing or about using it with other platforms. There's absolutely no obligation. They're not there to hard pressure you into having to buy something right now. They'd be happy to answer any question, but just remember that this offer is for a limited time only, $300. After, I think next week, it would be right back up there to $8,400. So as I always say, don't sleep on it. Don't take your time just simply thinking about it, because you may miss a good opportunity. Now, as promised, I would take the last portion, the last 10 minutes, to answer any questions. So if you do have questions about what I went over today, please go to your chat box and ask me, and I promise I'll answer them to the best of my ability. Someone is asking, with the 25, 50, and 75% trading technique, how long should I stay in the trade? That's a good question. This is a very common question that most students come up with. In other words, what they're saying is that, let's say you have a buy signal in XYZ, and the next day it does confirm, it goes up above. And it starts to come back a little bit, but it doesn't hit any of the levels. It doesn't hit 25, it doesn't hit 50, it doesn't hit 75. It just kind of stays there, okay? How long should you wait? Well, this once again goes back to our teaching philosophy. It's really up to you. We have students that say, listen, I like to wait for a couple of days, and if it does not work for a couple of days, I'm out, because that usually means the trade's not going to work. Or students will say, no, I'll just wait. I'll keep waiting until I either get filled or I get stopped out, whatever. It's really up to you, because so much of it depends on the market you're trading. We may have students that only trade ETFs, and some of these ETFs may be just going sideways, okay? And so for that point, it's best to stay in these for a while, because most of the time, if they're sideways, they'll back and fill and you'll get filled. Whereas we may have other ones that, they're too volatile markets. Say you're trading a tick chart of the E-mini futures and it just goes straight up and straight down. And then you say to yourself, wow, I don't know if I want to stay in this that long. So it's up to you. It all depends on your market, and it all depends on what time frame you're trading. So that's why we always state, it is not a suggestion, it's a requirement. You have to paper trade with this. I don't want anyone who went to this educational presentation today to say, oh, okay, I'm going to start using this on Monday. No, paper trade with whatever market, whatever thing you're looking at, and go back and look at your last 5 or 10 trades and see how well it would have worked for you. Then you'll get a better idea of how you want to apply these methods. And if you want to apply them at all, it's up to you. Many of our students say, listen, this is great information, but really doesn't work for me for the way I trade. Okay, great. Remember, you're in charge. Our only job here is to provide you with information, but you've got to make the decision whether you and how you apply it. We're not going to do that for you, because that would be doing you a disservice. No two traders should ever trade alike. So you've got to find your own way. This is what it means to be a successful and consistent trader. So experiment, but please paper trade first, okay? Next question. In the pullback technique, do you still use the buy-sell line? Well, yes, you can if you want to, but yeah, that's one of the main things about a pullback. A pullback strategy, which I assume you're referring to strategy number 1. A pullback technique, or method, I should say, a pullback strategy means that you look for the overall trend and you look for a counter trend within that overall trend, okay? Well, an overall trend is determined by the buy-sell line. And the buy-sell line is just simply the 50-period moving average. And one of the best things about this strategy is that you can scan for these signals. So you'll know automatically when a setup is there, so you don't have to look through hundreds of stocks and say, All right, well, is this above or below the buy sell line? Okay, now it's above. Okay, so now I should start looking for this. You can just scan and you'll see the signals automatically generated, and our scanning process takes less than a minute. We purposely made it simple for you. So it's a great, great tool. It's a great, great strategy for less than $300. I mean, you can't go wrong. And it's really, really a great, great tool to have. Is the product at all available by email, or will it be mailed to the purchaser's address? Well, first of all, no, it's what happens is for this, you will get all the information via online. In other words, you will be emailed. You will be emailed a link to the course. It's all online, and you will be studying it online with your special link. But the platform, our tech support is so good. We have rave reviews and testimonials about our tech support. They will install it for you. You make an appointment, usually within that day. They'll install the platform on your computer and give you tutorials on how to use it. Here's the other best thing about this is that you will also get my personal email address. So if you have any questions on what an indicator means, or you're not really sure if you're doing something correctly, you can always email me whenever you'd like, and I will be there to answer your question. So all this is done with so much ease. It's all done for you. And you get a link to the courses, to the information. You also have a scheduled appointment, and someone sets the platform on your computer, and you get my personal email address. Okay. Someone's asking, is the scanner an independent product, or can it be added to a platform such as Thinkorswim? No, the scanner, good question. The scanner is only available on our platform. That's the beauty of having our platform. We know we have a lot of students that have Thinkorswim or TradeStation or Metastock, and they don't have the availability of the scanning process. So what we suggest is you continue to use your platform of choice for entering your orders and for maybe watching the markets if you'd like. But anything for education, for signals being generated, for scanning, for overnight looking for setups, that's where you use our platform. That's the way I use it. I have another platform that enters my orders that I trade off of. And then I'm looking at probably 80% of the time at our platform for setups, for different strategy signals, for different educational information. Okay. But the scanner is just, you'll only find the scanner on our platform. And our scanners are great. I mean, we specifically designed them to be simple. I often say this, and I'm not going to mention any names, but I've used just about every scanner out there and every platform. I've used just about every platform you can think of. I've traded with it. And they are so complicated. It's just unbelievable how complicated companies make their platforms. I mean, I almost said the name of this, but I'm not going to say it. But I've even had students say they use this platform and they can't make odds or ends out of it. It's just too complicated. There's too much information. So we specifically want to make things simple for you on our platform. On our scanners, it's just as easy as one click away. You click on the market you want to scan, and you hit scan, and that's it. And in a matter of minutes, you'll see all the signals being generated. Okay, it takes about 1-2 minutes at tops. So it's so easy. We specifically did it for that purpose, to make it really easy. And I'm sure there's a lot of testimonials out there of our students that can say the same thing. How long do we have access to the recording? Are you talking about this specific recording, the recording that we're doing right now, this presentation? Or are you talking about the classes, the online classes? You have to be more specific. If you're talking about the online class, well, no, you purchase the online classes, they're yours. It's not like they expire. So for $297, they're yours for life. The only thing that expires after 6 months is the platform. And then you can re-up if you want, or you can say, thank you, but I figured out how to do this. I've had 6 months of preparing, and I know exactly what I like, and I don't need the scanners. I don't need this. I know exactly how to do it, but you've helped me tremendously, and I'll just go on my own way. Great, that's fine. But I'd be happy to tell you that I'd probably say about 90% of all students re-up and take the platform again, and usually sign up for another year or maybe even 5 years. It's up to them. But I think the price, someone's asking, what is the price of the platform? I believe it's $97 per month, okay, which is still extremely inexpensive. If you're thinking about something like TradeStation or Thinkorswim, you won't find the information that we give you on our platform anywhere else, because the information are things that I've accumulated from the floor. Most of these platforms, once again, that will remain nameless, they're giving you standard traditional indicators, traditional ways of trading. But they're not giving you things that, the floor traders were using and things that I've had. So I would really take advantage of that 6 months, and then you can decide for yourself if you want to continue. So here's how to do this. Once again, contact Pro Trader Strategies. I would suggest the easiest way to do it is to contact one of our trading consultants on the phone right now. Just call 310-598-6677. Be happy to take your order over the phone. You can have the information probably later today, and probably by Monday, you can set up for an appointment to get the platform. But that's okay, because we want you to follow and learn all the information first before using the platform. But it's that simple. And once again, for less than $300, I mean, this information, which has taken me years to accumulate, is close to $8,400. You're going to have this less than $300. So it's a great, great way to become acquainted with us. It's a great way to elevate your trading. Okay. All right, great questions. If there are no further ones, I just want to say thank you once again for attending. Thanks for taking time out of your Saturday morning. I hope you learned something. I hope you experiment with this to see if it could really help your trading. I think you're overwhelmingly will say, yes, it could really help increase my odds for consistency. So take advantage of this offer before it disappears. And as we take one last look at our disclaimer, I just want to say thank you so much for attending today. And I look forward to having you become a student of mine at Specialist Trading. Thanks again. Have a great weekend. I shall see you next time. Bye-bye.